Are you ready to follow a proven trading strategy? Do you want to own the strongest index, hottest sectors, and bond ETFs only when they provide an opportunity for growth? Now you can with the Total ETF Portfolio Trade Alert newsletter. Follow our long-term investment positions, active index and bond trades, and own the hottest sector ETFs during stock market rallies. Visit www.thetechnicaltraders.com to learn more. Welcome to the Technical Traders Podcast, the show that brings you technically proven strategies and trade ideas from experts around the world. We're going to help you make more money with less risk so you can take your trading to the next level. Now, here's your host, Jim Goddard.
My guest is David Lyon. He's the CEO, founder, and managing director of research and trading for ealgo.com. Welcome to the show, David.
Thanks, Jim. Glad to be here.
David, can you just give us a little thumbnail about what exactly you do at ealgo.com?
Well, at eAlgo, we focus on Forex. So we look at all the different markets, commodities, stocks, ETFs, and so forth. But we're really interested in what's going on with the global money flow in the foreign exchange market. And of course, the Forex market does more than $6 trillion a day in daily volume. So it's really a good indicator as far as what's going on around the globe. And so I head up the quantitative research and trading, analyzing the markets and putting the trades through and also overseeing all the risk management.
How did you get started in trading or investing?
Well, I've been doing this for a while. I mean, it's hard for me to say this, Jim, but I've actually been doing this for about 40 years. And I got started as a kid. I grew up on a farm in western Nebraska, a wheat farm, and just being involved in the work with that and watching the price of wheat. And then I think when I was 5 years old, my parents bought me a calf, and I started keeping track of the cattle market. Every spring I would go to the sale barn and buy calves, and in the fall would sell them. And so starting with one calf when I was 5, by the age of 15, I had grown that up to about 15 head of cattle. And I did the same thing with chickens at an early age, started with 100 chickens, ended up with 2,000 chickens. And so that's sort of how I got involved in the commodities aspect of things. And then it wasn't until I was probably about 20 years old, I started looking at the actual markets, precious metals and things of that nature, due to a family friend. And so I got started in it. I think my first commodities trading account, I started with $7,000 that I had saved up, and within 90 days or 3 months, I had tripled that to $21,000. And then I experienced my first black swan, which was the Russian grain embargo that came out of nowhere. And my $21,000 went to minus $1,000. And that was my first hard lesson in leverage and risk management. And I considered myself fortunate because in that particular brokerage office, I saw a lot of people lose 6 figures or larger during the Russian grain embargo. So it's been a process, and those are the things that have helped me become what I am today with understanding gaming theory and risk management.
Is there anybody you really admire or influenced you to become involved in the financial markets?
Well, early on, like I say, I had that first experience was a painful experience. And so after going through that, I said, I think I better learn more. I need to study this more and learn more about what I'm doing before I do this, go any further with this. And so just from a common sense standpoint, I thought, well, where would I go to find out this information? And so I started studying, reading a lot of books, trying to find out all the different traders, that were successful. And so early on in my career, I studied, the mathematician W.D. Gans. So I've studied Gans' works, for almost 40 years now. And of course, Elliott wave theory, and then, of course, other things along the way, with Bollinger Bands and standard deviation, really looked a lot at that, vibration and Fibonacci and things of that nature. As far as a specific person, one of the things that's really helped is the books, of course, that Jack Swagger came out with called Market Wizards. And my copies, of course, are just worn out cover to cover. I even have my own version, electronic version of Cliff Notes of his books. And so in sort of studying all of those different traders, a lot of them have a lot of different styles and techniques. I put that all together, the money management and so forth with, Gann and Fibonacci and Donchian channels, Bollinger Bands on standard deviation and things of that nature, and just came up with my own style. And even some of the traders going back into the 20s and 30s, like GM Loeb, is one of the guys I learned a lot from his writings about risk management. And, a lot of people talk about diversification. I know GM Loeb always said, hey, take all your eggs and put them in one basket and then keep an eye on that basket, because sometimes we can get over diversified. And then if a black swan or some event hits the market, we just don't have enough time to manage our holdings or make changes. And so I tend to focus specifically on one or two markets at a time, and then that way I can really keep a tight handle on risk.
What's your trading philosophy? What set of principles, beliefs, or experiences drive your decisions?
Well, because of living through and trading through many market events, like the crash of 1987, and of course, more recently, the drop that we had in 2007, 2009, and knowing how quickly things can go south, that's really been the basis for a lot of my trading rules that I have now, and the development of those, is through experience. And so in my trading that I do for myself and a few friends and family is I always use a stop. So I always know where I'm going to get out, reassess things. And then I try to manage my expectations. And so I try not to, obviously this is customizable, but I try not to exceed, over an annualized basis, a 10% drawdown. And I look to make about a 30 to 40% rate of return because the drawdown really has a big impact as far as how fast you can come back and make money. So the shallower the drawdown that you can keep it to, the better your chances are, of course, to generate a great return for the year. And so in doing that, Jim, what I do is on a trade-by-trade basis, I typically will not risk more than 1% on any particular trade, and many times the risk is actually 0.5% of my portfolio. So I've got a proprietary, Excel calculator that I use, and I plug in my account balance and, my stop loss that I'm going to use, and I calculate it out, and that actually gives me my position size then to be able to do that consistent position sizing every time.
We'll have more with David Lyon right after this.
Are you ready to follow a proven trading strategy? Do you want to own the strongest index, hottest sectors, and bond ETFs only when they provide an opportunity for growth? Now you can with the Total ETF Portfolio Trade Alert newsletter. Follow our long-term investment positions, active index and bond trades, and own the hottest sector ETFs during stock market rallies. Visit www.thetechnicaltraders.com to learn more.
Welcome back. We're speaking with David Lyon. David, what's your favorite type of analysis or indicator you find helpful when you make your trades or investments?
Well, I have a lot of different things that I use, but one of the things that I really do like is the Bollinger Band. I know it's a very common indicator, but there's so much that you can do with it. I mean, you can use multiple bands, for instance, and you can use on any particular time frame that you want. So the standard for the Bollinger is a 20 period with a 2.0 standard deviation. But what I do is I take that into a different realm based on, like I say, Gann mathematics and Fibonacci and so forth. And so I utilize a Bollinger maybe, like on a daily chart. I might look at, instead of setting it on 20 days, I set it on like 60 days, which of course is 3 months or 1 quarter. And then instead of using a 2.0 standard deviation, I'll probably use like a Fibonacci number, like a 1.618 or a 2.618. And then that gives me a pretty good idea where the market is moving up or down, if the trend is a bull or a bear market. And then what I tend to do with that indicator is I will look with my other indicators and other tools that I use. I'll look to, if it's an up market, I'll look to buy when the market retraces or goes to the bottom of the bands. Or if it's a down market, I'll look for the market to rally up to the bands, and then I will sell, short. And so I really like that particular indicator, Jim.
David, what is something you wish you would have known before you started trading and investing?
Well, there's a lot of things about trading and investing that are not in books. And, of course, a lot of it is personal. Because what might be best for me may not be necessarily best for you. But I think the thing that applies to all of us is just really understanding the emotional part of the trading and then understanding the risk management. So early on, if there was some way, other than having to live the experiences and some of the painful experiences early on, it would have been nice to just understand that being a successful investor, trader is more than just using an indicator or using a system strategy. That really the biggest part of the battle is just having a system or a plan in place to manage the risk, manage the exposure to your portfolio, and then that allows you to control your emotion. Trading, as a friend of mine taught me, trading is all about mathematics. And it's not complicated mathematics, but you need to run the math and decide at what level are you satisfied with trading. And so trading can either be as risky as you want it to be and as exciting as you want it to be, or it can be downright boring, depending on what your personality style is. And so you just calculate out the math. And that's something that I learned over time, that I could control the process and not let the process control me. And then, of course, the other thing I was thinking about, too, is that there's a lot of wisdom in, as they say, keeping your powder dry. So the beautiful thing about the markets, too, is that you don't always have to be doing something every day. There's many times where it's actually wise to just keep some of your capital, waiting in the wings for the right opportunity when everything comes together, where you have a high probability trade, and then implement that capital. So a lot of what I needed to learn, or wish I could have learned earlier, was patience and just how to utilize all of those things to my advantage.
David, thank you so much for chatting with us.
Thank you, Jim. I enjoyed it.
My guest has been David Lyon, CEO, founder, and managing director of research and trading for e-elgo.com. I'm Jim Goddard.
Thanks for joining us this week on the Technical Traders Podcast. If you found value in our show, subscribe and give us a rating or share it with a friend. That would be greatly appreciated as well. TheTechnicalTraders.com, your source for technically proven strategies to make more money with less risk so you can take your trading to the next level. Comments made on the Technical Traders Podcast are an expression of opinion only and should not be construed as investment advice or recommendations to buy or sell any financial instrument. This information is for general information and educational purposes only. Guests on the show are not compensated for their participation. To view our full disclaimer, please visit our website at www.thetechnicaltraders.com.